All right, so there are plethora of funds available in the market to invest your hard-earned money, and how do you assess which is the right fund for your portfolio? What are the criteria that one should look at to help you navigate through this maze? We are joined by Arnav Pandya, founder Money Edu School. Also, do not forget to send us your portfolio queries on our WhatsApp number, which is 865-797-4571, or you can email us your queries on themoneyshow@etnow.tv. All right, so let's begin the show with the first query, and good evening and welcome to the show, Arnav. We have a question from Siva Kumar, who says that he has a corpus of around he wants to have a corpus of around 50 lakhs in 5 years and wants to understand to achieve this corpus, what's the amount of SIP that should be done every month, and what kind of fund mix is actually needed to achieve this target. So this question is from Siva Kumar, and we will try to get him on phone line. But till the time we have more clarity on the question, what should be the strategy? Arnav.
Good evening. And so now looking at this question which is there, now the goal is just 5 years away. So 5 years away is not a very long time, because specifically in this case, since the fact is that there is no lump sum available to invest at this moment. The investment that will come in through a systematic investment plan, which means that each month some regular amount will be invested. Now, if you look at the 5 year period, the average holding period actually comes to 2.5 years, because the entire investment is going to spread out over this period. So let us first look at the first point, which is that if you want to accumulate 50 lakhs in 5 years, how much is the amount that you need to invest? Now, since the time period is short, you cannot use a full equity uh, portfolio for this kind of goal, because it becomes too risky and it is not a viable thing with this kind of short investment period. So, which is why, assuming a return of say a 10% compounded, you need to invest at least 65,000 a month to reach this kind of target. So that is the first point. The amount required would be 65,000 per month. The second part which we come to is what is the kind of fund mix that you require. And it's very clear that the entire corpus will have to be handled in two ways. One is that initially you will need to have a hybrid exposure, because you cannot go all out for an equity exposure. And in the last 1.5 years, more and more of that hybrid exposure will need to be into debt, because as the goal comes near, you will have to at least ensure that less money is at risk. So the right kind of funds at this moment for the first part of the entire portfolio, according to me, would be balanced advantage funds. These funds move between debt and equity according to the expectations of the fund manager. So these kind of funds for the moment would be the right mix. As you go towards the fourth and the fifth year of the goal, you move into more conservative funds, and that would then ensure that at least whatever you are aiming for will be achieved.
So I want to understand one thing now. 65,000 per month he needs to invest for 5 years in order to accumulate 50 lakhs. But what if he's not able to do an SIP of this big amount? How much should he start with?
Well, according to me, if you are not able to do what the target requires you to, you should do whatever you can do. So whatever amount which is available, at least should be invested. It should not be either the full goal or nothing. At least you should try and invest as much as possible. And with the goal in mind, you know what is the level you need to reach to. And here, since the time period is very short, the thing is that the investor needs to reach to that goal, or rather the targeted investment amount, very quickly, because every month you lose in terms of a lesser investment, the higher the requirement will be, and the distant the goal becomes. This is like, I mean, playing a T20, where, I mean, even a couple of balls being wasted will ensure that the required rate goes up significantly.
Tried asking as many questions I can on Mr. Sivakumar's behalf, which is why we tell the viewers that it's good if the viewer is there with us on the phone line, so that you can directly talk to our experts. And this is the only show which actually gives you an opportunity to get your financial planning done from the best of financial experts available in the market. And all you have to do is just send us your query on our WhatsApp number and our email ID. And when we try to reach out, because if we have finalized your question and we want to take it on the show, we want the viewer to also interact with us and with the expert, which couldn't happen with in Mr. Sivakumar's case. But anyway, I just hope that he got his answer, and if at all he has missed listening your advice, he can catch this show up on our channel's YouTube. I will move on to our second query, and again, I don't have the name of this person. I think he's 66 years old, and he has a postal deposit, bank FD, an RBI bond, and he has 6 lakhs to invest, and he wants to know what kind of mutual funds he should be aiming for. I think I will skip this query also because I don't have the caller on the phone line, and the caller apparently is 66 years old, and it is an age where I don't know how he has placed his finances, and I have no idea what's the requirement of this entire corpus that he wants us to help him with. So I'm going to skip this query, and I'm going to go to Dr. Kurian's query. And we don't have him on the phone line once again. He's investing in Motilal Oswal Flexi Cap, and he's doing this investment SIP of 30,000 since last 6 years, and his current corpus. Okay, so I don't have the current corpus amount, and he says that he doesn't need this entire money for next 10 years, and he wants to know if he can continue his investment in this particular fund. Again, he's not there on the phone line. I would have asked more questions to get more clarity. The current corpus that he's collected is almost around 19 lakhs. So what do you suggest?
See, one thing which is important to understand is that what is the kind of exposure that is already there in the portfolio, because this is just one fund which has been mentioned. So anytime an individual goes towards achieving a goal, it is very essential for them to actually create a portfolio. And the other point is that within a portfolio, there should not be too much of repetition, because repeating the same kind of funds or the same kind of exposure doesn't do any benefit in terms either of diversification or in terms of actually having a different kind of benefit if, say, a different kind of sector in the market is doing well. So in this case, I mean, at least from what is there in the question, it seems that the question is only about a single fund. Now, if there is only, say, one fund in the portfolio, then that is not a good thing, or it's not a good way in which you want to achieve your goals. So the idea should be that you should always have multiple funds which cater to various market caps in the overall equity markets, and that should be the core part of your portfolio. If you have additional extra amounts, then you can look at various other focus funds, things like that. Now, looking at this case, see, if there is only a single fund, my recommendation would be that you should have more funds which look at the actual goal setting process. And for that, a flexi cap fund is a good option which is already there. But a flexi cap fund is not that flexi cap in the sense that a large part of this exposure is into large caps. So if you want a slightly more diversified exposure, say adding a mid cap fund or even a multi cap fund would be a better idea, because then it gives you a better exposure across various market caps. So this fund, you can continue with it, but if this is the only fund, it is imperative that an additional fund or more than one fund is added, so that over the next 10 years, which you have at your disposal, this is a long enough time period. It is suitable for an equity oriented fund, but it should be diversified.
Right. Now, I also want to understand his strategy. I don't know if he's just investing in one particular fund or he's just given the details or asking question for only one fund. But then having just one fund and putting all your amount in this particular investment instrument, how good strategy is this?
See, one thing we have to understand that a fund by itself has multiple holdings in it. So it is most likely that your fund will have anything between 35 to 50 stocks in it. But the question is that does this give you an adequate exposure to different parts of the equity markets? Because now with the SEBI definition of various funds, it is very clear for a person to understand where exactly the investment is going. Now, a flexi cap fund allows the fund manager the flexibility of investing wherever they want. But what has been seen is that flexi cap funds, for example, have a large cap bias, which means that around anywhere between 60 to 75% of that corpus goes into large caps, another 15 to 20% goes into mid caps, and a little bit into small caps. So if one wants a better exposure to other parts of the market, then it is important that you have either a mid cap fund which gives you more exposure there. This is just to balance out the actual exposure in the market, because if you already have, say, other parts of your portfolio where you have multiple funds and you already have this kind of exposure, then the question that you need to look at is whether in monetary terms what is the weightage to various parts that this fund is giving you. Because see, 19 lakhs which you have mentioned as the exposure, that itself is a large amount. So it should again not be that one single fund has too much exposure, one single fund house does not need too much exposure. So diversification, not just in terms of holdings, but also in terms of the kind of fund, the kind of fund house to which you are exposed to, all that also needs to be ensured.
Move on to our next question, Sanjeet Ruban, and he has four mutual funds and he's doing SIP since last 2 years. He says he has Nippon India Pharma, Axis Blue Chip, ICICI Technology Fund, Kotak Small Cap Fund, and he wants to know if this fund mix is good, if this portfolio that he's made is good for around 5 to 10 years, and he has invested in few individual stocks and bonds and in FDs as well. We don't have those details with us, but then talking about these four funds, how well diversified do you think he is? Because I think there is a problem.
Yes, I mean, see, whenever you construct a portfolio, it is just not the number of funds, it is just not the different kind of fund houses which you have which matter, but even the type of funds. Because one strategy which every investor needs to follow is that first they need to create the core portfolio, and core portfolio means having an exposure to various parts of the market. Once that core portfolio is done, you have the basics in place, then you can look for other investments which add on to it. So for example, in this case what we can see is out of the four funds, two are actually sector funds. One is a pharma fund, one is a technology fund, which means that this portfolio by its very nature is aggressive, but because there is only half of it virtually going to just two sectors, it is more than aggressive in the sense that even if you are taking a big risk, there could be a situation where just because these two sectors are not doing well or one of them is not doing well, your overall portfolio suffers. So just being aggressive doesn't mean that you take too much of risk. So the idea is that these two funds, which are sector funds, or one of them is a thematic fund, it can be replaced with one a flexi cap fund and one a mid cap fund. So the mid cap fund, for example, will keep the portfolio a little aggressive, which is say required because the time period is long and maybe the goals are even larger, but it ensures that there is some sort of balance being maintained in the portfolio. So that kind of thing is important, and which is why my suggestion would be move out from the sector funds and move to a flexi cap and a mid cap fund.
So here's a diversification lesson that you've given to our caller Sanjit, and now the kind of funds that you've recommended, a flexi cap and a mid cap. What names would you suggest?
So in FlexiCap, I would prefer something like a Parag Parikh FlexiCap, which is a value-oriented fund, because this, along with the existing fund, large cap fund, which is there in the market, those would complete in the portfolio. Those would complement each other. And in the mid cap space, my choice would be Kotak Emerging Equities, which is a fund which has been consistent, which has a long good track record, and which also follows a buy and hold strategy, because the way it is managed, that itself gives you an idea of how this actually whole strategy of the fund is in place, and which is, I think, an apt choice for this kind of portfolio.
So that will be all from our caller queries section. And thank you so much, Arnav, for answering all these queries for our viewers and helping them plan their finances. We will have you back once again on the show. But then it's